for sure. But when you're also talking about time to sell, right? Because you are also a big proponent of knowing when to sell,
Of
and
course.
you've gotten your selling decisions right several times. So, what is your framework that you apply today?
First of all, selling decision has to come out of ki, how much is enough?
Hmm.
And selling decision comes out of realization that are you even deserving of the money that is there in your P&L? That was a decision, primary decision that in 2000 February that I made that I had put in some, I think 20-25 crores uh, in the tech stocks in India, a bunch of them. And they were up like 20 times in 2 years.
Wow.
And suddenly I'm looking at my P&L and I'm saying, that's 100 million bucks 25, 26 years ago. I'm just 35. And I'm saying to myself, and this is not some valuation notional number. This is cash in the bank, literally. If I sell everything with the press of a button, I get it in the bank on T plus whatever 5. I'm saying, I'm an idiot. How can I be worth so much? I just got lucky. I had a hot, hot hand, like a gambler at a table, and you're winning big. I think this is it. I mean, I don't deserve this money. And that was the primary reason. The cycle and the returns were all additives. But the core was, bahut ho gaya yaar. I mean, no, this is not even, it doesn't even look legal that you can make so much money, you know. So that you have to have a very grounded sense of your own capabilities in investing.
But some people would get very confident that, this is all because of how I know and how well I timed it. But it had an opposite effect. And
I absolutely. I always believe that कि थोड़ा डर के invest करो तो you will last longer at the pitch.
yeah.
Overconfidence. I mean, I've seen it in my life also. My worst trades or my, let's say, loose shots will always happen when I have played a good innings prior in the previous innings. I'm complacent. I'm overfed. I'm well fed. I'm lazy. My footwork is not good. And I go chasing a ball outside the off stump and I'm gone. Instead of that, if you come out of a tougher period or you make it tough on yourself,
Yeah.
you are more careful in your play. So थोड़ा डर के invest करना चाहिए.
And beginner's mindset and
होता है,
humility.
होता है.
Oh.
And I went to a casino only once in my life when I was in school.
That's surprising, given that, you wanted to get into very risky
I
investments
know,
at one
I
point.
know, I know.
How is that?
I went with my father to Nepal, to Casino Nepal. That was the closest one to India, and he took me to the casino and I gambled at blackjack and all that, and I think I made 500 rupees or something. The next night I lost half of it, and that's when I did a stop loss. That I said, done ho gaya, abhi chalo, let's go and buy something, in the shops tomorrow. But I figured that 500 rupees in school was, I'm talking 1980, 80. It's a lot of money. Again, I'm not capable of this money. You see, so being grounded, being humble, these are basic qualities in investing. Don't become complacent.
But clearly, something in your life teaches you that, right? Because not everyone knows that, when they are seeing these kind of highs or like, in their PNL is looking so healthy that, they could attribute it to themselves.
Let me give you a simple example. And we all look up to or looked up to Warren Buffett and his numbers and all that. But do you, or frankly, nobody knows this. I'm writing an article on this also. Most of his gains don't come out of the investing piece. Most of his gains come out of the disinvesting piece, meaning sitting on cash.
Right.
This is a very interesting data. If you look at the aggregate of, let's say, from 1980, 81, when his big boom started, and you disaggregate the data, it is just having sat out bear markets or bubble markets that has made him the biggest alpha.
Okay.
Because the biggest alpha you will make is when markets tank 20-40% and at least you remain flat. So that in the next bull market, I'm starting the marathon at the 20th mile while other people are still struggling to reach the race because of the losses.
Yeah.
That's how you making alpha in a bull market is damn difficult because everybody has stocks. You have one, I have a one, everybody has a winner. It's a bear market where it separates the men from the boys or the women from the girls. That's where the differentiation happens. Buffett's numbers are good because he sat out the dot-com bubble. He sat out part of the GFC bubble. And now he sat out this whole boom and bust following the Trump crisis by sitting on 50% cash. If you remove that, his numbers are very, very average.